Hey, this is Peter Cunha, your New Jersey real estate giant, broker owner of Open Doors, with my good buddy David.baum.
Hello, everybody. David.baum, Cross Country Mortgage. How's it going, Pete? How was your Halloween last night?
This salty fry, and I'll post a picture for everybody to see, is doing just fine. We were talking about it. It's like, how spooky was Halloween yesterday?
It was, I think with the rain, that was because it did, luckily it ended up raining later in the day. So it wasn't that bad. Usually our neighborhood is packed. And unfortunately, we have a lot of candy left over. And I don't want that in my house because when candy's around, unfortunately, I gravitate towards it.
Yeah. So what's your candy of choice?
Ooh, I love Crackle. Those little like the Nestle Crunch knockoffs. Those
Yeah.
Crackles are really good.
All right.
Kit Kats, Twix, they're the go-tos. You got the peanut M&Ms. But yeah, usually the Twix or Kit Kats or they go down like, pretty smooth.
All right, so you just nailed mine. My wife was telling me that there was a shortage on Kit Kats this year.
Yeah.
And I'm like, I don't know about that. I'm gonna call BS a little bit. And then I went to a coffee shop for one of my weekly meetings, and the guy's got. I was like, am I missing something? Because it was like milk duds. Like nobody likes milk duds, and like just a bowl of milk duds and Kit Kats. And I'm like, when did Kit Kats become, like the not, the candy corn of Halloween?
Whoppers aren't bad either. The Whoppers.
Yeah, yeah, it's just weird because the only reason why I'm trashing milk duds is like I saw a Mr. Beast video where that was like the punishment. You had to eat milk duds.
Yeah, I get sick of them after a while.
Yeah. So let's talk about, I literally dressed up as French fries, and we're talking about what's spooky. And I think that we keep talking it, broken records here, right? It's Aaron Judge hit 62 home runs. Yay. Yankees are out of the playoffs. It's
Unfortunately, yeah.
like interest rates like every day, every week. It's we're talking about the same thing, and we got the big meeting tomorrow. So
Yep. Yeah. So the Fed's meeting again tomorrow. They are anticipating about a 75 basis point hike. The last couple hikes were pretty much 1%. So so is this that it's coming down? It's the hike's going to be a little bit less. Is that positive? Right. I mean, we're heading in the right direction. They're still going to hike it, and they're already forecasting potentially a 50 basis point hike in December. Is this roller coaster finally maybe getting towards the peak? That maybe the front of the coaster will start to, get over the peak, and the back end still has to come up before rates can potentially come back down. It's possibly, I think we're still a few months out and we're still going to have this volatility. I think last week when we spoke, the 10-year treasury got real ugly, and it was hitting like 4.3%. This morning, it's really trying to break through 4 and get back to the 390 range. It hit there this morning, and then it came right back. Basically, they're just not quite ready yet, guys. Let's keep rates up for a little while longer. It's just the volatility continues. The game of Plinko continues. Rates keep bing, 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 bing all over the place. The reality is that no matter what type of loan anybody does right now, whether it's a 30-year fix, whether it's got the buy down, whether it's an adjustable rate mortgage or anything, we keep focusing, just focus on the house. Let's focus on the payment. Let's not so much worry about the interest rate right now. No matter what type of loan you do, there is a very good probability that they'll be refinancing this loan in a couple of years, maybe 12 months, 18 months, maybe 9 months, maybe 2 years, whatever. But there's a good chance that all of these rates, no matter what type of program is out there right now, that somebody will look to try to refinance if and when the rates do drop, and they are forecasting that to happen.
Yeah, and good point, Dave, because I hosted two open houses this weekend in Monroe. I'm really excited to, hopefully get, we've gotten several verbal offers on it, but it's one of the things that everybody's kind of, again, just spooked out about is like, when we first listed this house 3 weeks ago, interest rates were slightly lower than they are now, right? And these pre-approvals, we were talking about this. It's like, how qualified is the buyer? It's like, well, when did you get the pre-approval from? And it's like, it used to be they were good for 90 days, right? Or
Right.
60 days. Like realistically, it's like now 30 days.
You just got to continually to revisit it because of the rates, and you're like, well, what can interest rates do, right? I mean, good, bad, and different. Well,
Sure.
it absolutely can affect someone's buying power. No doubt about it, right? Interest rates rise, talk about pre-approvals, you know, for every, right now, if interest rates are near 7, you're talking almost $70 for every $10,000, in a movement potentially, right? So when people had pre-approvals from earlier this year, when the rates were in the 3s and 4s, and you're talking maybe $40 for every 10 grand, and now it's maybe $70 for every 10 grand, we're over $100,000. That's a $300+ movement, right?
Right.
If you're talking about a $300,000 house, they're paying an extra $1,000 more potentially than what it could potentially be. I mean, there's that much gap from rates the end of last year to now.
Yeah.
So that constant re-educating the buyers and re-educating them on the payments and where they are, and a lot of them are just, what's the lowest rate option? They don't even care about, like, I don't even care I have to explain what an adjustable rate mortgage is if that's something that you want to look
20
at,
years, 15 years.
like,
Yep.
yeah, obviously it's just, I really try to educate and give the borrowers as much information so they can make a sound decision on what route they want to go.
Yeah, and Dave, I just, if I don't say this enough, it's a thank you because, it's hard enough as me as the realtor to try to find people and gear them towards kind of what's out there, right? It's kind of like when I take a listing and, I go on a listing presentation. Well, this guy told me I could sell my house for $1 million. I'm going, I wish you could. And if you do, God bless you. Because I think your house is only worth like 800,000, right? And it's like, okay, oh, by the way, I got a call back 3 months later. Yeah, we just, he got me to cut the price by 100,000. He's like, we're now at 800. What do you think my house is now worth? And I'm like, stay firm. You'll get 800,000, but it looks a little suspect, right? Or is that the kids say a little sus? Uh,
Yeah.
it's like,
Yeah, I'm saying that it's important, for them, to just build that trust. If they listen to you from the beginning, they could have, avoided some potential headaches, and, a couple months go by and they don't get an offer, if they listen up front, you might have been able to, to maybe sell something,
right.
closer or sooner, or maybe even more than that. But as the rates rise, their value potentially could come down. You never know.
Well, I was just thinking about it because we were talking about a case study before we jumped on this call where it's like, somebody was, overpromised and underdelivered. And oh, by the way, hey, Dave, can you clean up this mess? And it's like, what do you mean? Like, I didn't even, like, why are you're shopping it around and now you're coming back to me and, like, spill on aisle 6.
Yeah.
Call Dave. It's like, okay, like, I'm here to help. I get it.
Yeah.
So, like, let's see if we can get you the house that you really want. So
Yeah.
yeah,
No, I see that all the time is, obviously, and you're in, you got people saying a lot of stuff in real estate. For me and the financing, you know, I'm definitely, I'm honest and ethical. I tell it like it is. We've got very competitive rates and products and everything like that, and, someone tells someone one thing and
yeah,
they sound like they may know what they're doing. And then 3 weeks go by. Yeah, it's exactly what happens. Someone calls back begging for help, because they didn't listen, and you try to be honest and explain it, and it doesn't work out. But that's the nature of our business, right? I mean,
Love
it
it.
happens all the time.
And just I feel like I'm playing real estate parkour today. It's literally, just jumping around, but this is the time that our value is really kind of tested, because there's a lot of people that just can't keep up with what's going on, or it's like, I know that you used to be a club pro in the PGA, and it's, would you rather be playing golf, or would you rather be helping your clients out? And it's like, listen, with the volatility, what happened at 9 o'clock this morning, what's happening at 4 o'clock this afternoon, two totally different environments, right? I can't be out on a golf course.
Yeah, I mean, they're just the past. We were showing before we went on live here, but over the past few months, there has been so many alert to locks, with the volatility, and not many. Maybe one day there was an alert to float, and of course the next day the market craps the bed, and then there's an alert to lock. That kind of a thing. It's been very volatile, so I gotta be, constant in touch with clients and referral partners, obviously, and just letting them know where things stand. But the buyers itself, they know the volatility is real. They know that, there's potentially better days ahead, but right now everyone's feeling it. So, we're just trying to come up with the best creative ways possible to get these people in the houses with the cheapest monthly payments. So that
Right.
way they can, get in comfortably and then be able to have the, ability to refinance down the road if and when ready.
Yeah, that's I think that's a valid point too, because one of the things that we're stressing, or I'm trying to stress. I mean, we had a very successful 2 days of open houses. And I just told everybody, I'm like, if you can afford it with these interest rates, there's greener pastures ahead, where you're going to be able to refi, and then you just kind of, you get to capitalize, because if you can afford it at these interest rates, if they do go down, we're not saying that they're definitely going down. It might not be for another year, year and a half, but when they do, you're just going to be able to save money.
300, 400, 500 a month, whatever. I mean,
Dude, it's carpet.
it's huge. That's a car payment for people,
Yeah,
So, and then
so
if there's any other debts they could potentially roll in with equity, I mean, they could save thousands of dollars a month potentially.
yeah, and I don't, I just want to kind of, I know we're kind of going up. I know we had some stuff lined up, but before we end, I just want to stress that this is still a really good time to buy houses, right? The inventories are up. There's less competition. You don't have to go 50,000 above ask, and it's like, yeah, you're going to be paying a little bit higher on the interest rates for now, and then hopefully, if you're going to look like a genius if interest rates go to 10%, I don't know, 11% before, like you said, the roller coaster starts going down again, and locking in at 7%. I remember those people that locked in at 5%, after they missed the boat at 3%. They're
They were
looking
complaining at 5, but now they're like,
they're
thank you
looking
so
pretty
much for
smart.
locking me
Yeah.
in. I,
Yeah.
I talked to someone 2 days ago, actually. He said over the weekend, he's like, David, I just want to thank you. He was locked in at 5625 and he closed, over the summer. And he was just like, I know I was breaking your balls over the fact of where my rate was, and I was happy, in the grand scheme of things. But now he's like, I'm really glad that we got protected back then. And he's like, I know that you'll follow up with me, if and when rates are dropping, that you'll save me some money, but they kicked themselves that they didn't buy 6 months ago. And then now
Now
they're
they're happy.
kissing and hugging, because if they waited a little bit longer, it would have been that much worse.
Yeah, and then another point is, like, I'm having a lot of conversations with, I think that the market, a lot of people think that the market's going to go down 10, 20, 30%. And I'm like, I don't, like, our area is pretty still, secure. Days on market are little bit longer. We're getting some price reductions only because houses were overpriced to begin with. But I'm seeing a huge influx still coming in from North Jersey, from New York City, the five boroughs, still
Mhm.
looking to move to Monmouth and Ocean County. And it's just, finding them the right house, because they still see value from where they're coming from to where they're moving. They're going from their postage stamp place in Staten Island, let's say, to
Mhm.
getting, a half acre here. And they're still sitting on some money after, they sell their house in Staten Island. So it's an interesting time. That's why I love doing these video clips with you, because I think that we just got to stay ahead of the curve a little bit and let people know what's really up.
Mhm.
When it's going one way and just interest rates are dropping, you're gonna call me up one day and be like, I can't do this. I'm writing too many loans, sending out too many pre-approvals.
Be a
So
good problem to have,
a
you know,
great problem to have.
be a good
So
problem to have. Yeah, no, I mean, I appreciate you having me on and, just love being able to, chat and, talk, a little bit every week about, some stuff, and we'll see what happens at the Fed meeting tomorrow. I know it seems like we have our meetings on Tuesdays, typically the day before a Fed meeting or a day before, we have some unemployment news or a day before a CPI index comes out or anything of that nature, but we'll fill everybody in and keep them up to speed next week. And I mean, if anything crazy happens, I'm sure we'll jump on a call sooner than later. But yeah, just anyone needs any mortgage advice, any help, I'd be love to help someone out for a purchase, refinance, anything. I'd love to set up a consultation. You can hit me up 732-853-4969 or david.baum at ccm.com. That's how you can reach me.
awesome. I usually love saying it. Dave, what's the best way to contact you? But
Yeah,
you stole my
already got it. I'm ahead of you. Ahead of you today.
All right, so Dave, appreciate your time, man. I know we're trying to put together a couple of deals now from that open house. Let's see what happens, and
Yeah.
let's see what the Fed meeting looks like tomorrow, man. I'll
All
chat
right.
with you then.
Sounds
Later,
good.
bud.
Have a great day, everybody. Take care. Peace.